we've got the management, in fact, to speak a little bit more about what is going on with Quess Corp right now. We've got Guruprasad Srinivasan, who is the Chief Executive Officer, and Ravi Vishwanath, who is the Chief Financial Officer of Quess Corp. Good morning, gentlemen. Thank you so much for taking the time. At least from what we can see, growth was broad-based in the third quarter, and you had growth in operating asset management as well, workforce management. You had global technology solutions, all of that seeing growth. Could you give us a sense as to what stood out in the quarter, and is that likely to continue going forward as well?
Great. Thank you so much for having us on this show. And overall, Q3 has been extremely good for Quess, with revenue year-on-year up by 31%, EBITDA up by 14% year-on-year, PAT at 94%, and overall our OCF has been at 67%. Overall it's a great quarter. We had high revenues and high EBITDA after a series of quarters, and this is the first time ever we have a higher benchmark coming up. And with economy little rebounding and the COVID expectation on the COVID longevity is less than more than anticipated. We are seeing green shoots coming up for Q4 as well. And as the GDP looks stronger for coming years, and we are just getting prepared, with new budget announcements around, getting prepared and strengthening our platform, strengthening our processes and people to start, getting more aggressive in terms of to ride on to the new wave that's going to come up.
Good morning, Mr. Srinivasan, and as well as good morning, Mr. Vishwanath. Cheryl also joining in the conversation. Let's talk about the recent development. We've seen that actually your stock price actually bear the brunt of it, and investors actually want to know, there's been a sudden departure of the current CEO that was Suraj Morajee, which is a concern, especially given that the company had positioned him as a change agent 2 years ago, and the company also came out in a better shape post the overhaul. So can you tell us, what does this actually mean for your business strategy? Any new development on this particular front? No doubt we have a new CEO as well for the company, but does that change the business strategy anyway?
So, definitely there is no change in business strategy. Whatever we have committed is going to continue, whether it is ROE commitments that we have made on 20% ROE, OCF and OCF growth, as well as the OCF growth year on year. So absolutely no change in strategy, no change in commitment. And as part of exit of the CEO, it's largely to do with an independent decision, and we respect and we are always a well-wisher. And we had a great working relationship with Suraj, and 2+ years was really transformational, and it's going to continue from here. So no change in strategy.
Cheryl, if you were to look at the OCF to EBITDA conversion that were there FY20 versus what it is today, it's more than double, which actually speaks volumes about the kind of results that Suraj drove within the company. The quality of revenues, the quality of collections, the quality of reports, has been phenomenal, and we will continue the good work that was started by him. There's absolutely no change in strategy. Our commitment to getting to 20% ROE by FY23 is firmly on track, and I think we will get there. Actually, we will get there.
Gentlemen, let's talk about two specific segments, which is the operating asset management and the workforce management businesses, verticals. You would benefit significantly from things going back to normal. And as I understand it, the third wave, as it is being called, has not been as disruptive as the previous two. But what can we expect specifically in terms of the output from those two verticals?
So, with regard to the vertical or the segment that's going to continue to penetrate, will continue to be BFSI, logistic and e-commerce. Retail is yet to completely open up, so we are just waiting for that segment. And when it comes to the asset management, return to work is something just we are awaiting for, and that's going to open up a huge opportunity across the IT ITS, which has been completely low for last almost 6 to 8 quarters now. So I think that's primarily what's going to change, a lot for us.
Also, if you want to look at it, the tailwinds that we have that we have, which is basically we're talking about the low level of formalization in our country, the impending labor codes that are going to get announced, and the multiplicative factors that we've all along been talking about. We are talking about more and more young people coming into the workforce. We're talking about greater level of formalization. We're talking about the share of large enterprises increasing. And what that means to companies like us. And we are also seeing, the increase in outsourcing itself over the last few years. If you want to look at the EPFO data, you'll find that the share of employees with people like us who are called business service providers is actually increasing, which comes back to the point that we've been making for some time now, that here is that we are, outsource contract, your contract employees is another form of workforce that's getting legitimized by the day, and it's getting legitimized more and more. And this productivity that we're talking about, all these are multiplicating factors, and these tailwinds haven't actually changed. They'll only get accelerated more and more as we have been seeing actually, Shreya.
Absolutely. Let me talk about Monster.com. It witnessed about a 69% year-on-year growth and 20% quarter-on-quarter revenue growth. Could you take us through your fundraising plans that you've undertaken, and what is the outlook on the opportunities that you see ahead?
As far as Monster is concerned, yes, we have raised capital, which actually validates the fact that we have been able to turn Monster around from where it was when we acquired it. We acquired it for about $15 million, and the current round of valuation actually puts it at about $100 million actually. And what we actually felt was it would be prudent on our part not to burn our own investor money into expanding the operations of Monster, and that there was lots of investors who had shown interest to invest in Monster. So that's why, that's precisely the reason why we said we'll go ahead. It's a validation of the product and of the market opportunity that exists today for companies like Monster, and any future capital requirement will be met through external capital.
Gentlemen, pleasure speaking with you. Wish you all the best for the rest of the financial year and indeed the future as well. Look forward to speaking to you again.
Thank you. Thank you very much.
Thank you so much.